Hello friends, once again welcome to our YouTube channel. Today we will be talking on stock trading. Is it a business or a gamble? Most of my students usually ask me that is trading a business or are we gambling? The answer to this is twofold. We'll take the first part of it. First is what is a business? Business is you buy something and you sell something. You get a profit or you get a loss. If you sell it higher, you are getting a profit. If you sell it at a lower price, you are getting a loss. So profit and loss in business usually is in percentage terms. I buy something for 100 rupees, I sell for 120, I get a 20% profit. So risk reward ratios are average over here. You never get more than double or triple, but in some percentages. But the probability of reward is very high. What do you mean by that? I mean that you buy something, even if it is not sold at the buying rate, it will be sold at a lower rate. It never becomes zero. So the probability of reward is very high. That is, at least you can exit at the buy rate. But when it comes to the other aspect, that is the gambling. Gambling is nothing but speculation. It is not a business wherein you buy something or sell something. You speculate about the price of something. That is gambling. Profit or loss is in times of investment. Here, the difference is gambling is never in percentages. Gambling is always in times. For a 1 rupee, you'll get 4 rupee. For 1000 rupee, 5000 rupees, 10,000 rupees. This is gambling. Risk reward ratio is very high. That is, the profit as compared to investment is usually very high because it is in times. But the probability is low. Now, what do you mean by probability? You are putting some money in a lottery. The risk reward ratio is very high. 100 rupees lottery, 1 crore price. But the probability is very low. Probably 1 in 1 crore also. So, whenever the risk reward ratios are high, the probabilities will come down. See, in option trading, most of the people want to buy options worth pennies, 50 paisa, 1 rupee, and they want to make 50 rupees on that 1 rupee. It does happen. Sometimes it does happen. But look at the probability. Such things happen once in 100 times. So the reward is very high, but the probability is very low. Whereas in a business, the rewards might be low, but the probabilities are high. So traders should bet on what? They can bet on reward, then probabilities will be low. If they don't want very high rewards, probabilities are high. This is just a game. Investment never comes back. The important thing in a gamble is whatever you invest never comes back. Take it as a horse race, a casino, a lottery. Most of the times, 99% of your times, you lose your investment. And people who are ready to make their investment zero or become bankrupt usually go into such types of investment. So what I would like to say, any business where the expectations of profit are very high ultimately becomes a gamble. Any business where the expectations of profit are very high and the probabilities are low will become a gamble. Now, how to correlate this concept in the stock market? Whenever you buy an equity of stock, you are probably doing a business. You pay the full money for that stock and you buy. So you don't have any panic if the stock come down or the panic of time. You can hold it for years till your rate comes. So there is no panic, you sleep very well. But when it comes to future, two options are there. You can either buy a future, you can short a future. So it is like a flip-flop a coin or a cricket, you bet this country will win, this country will win. There are two possibilities which are going to happen. So future can be considered as a gamble wherein you bet only on two possibilities. Either you win, make a loss rather. Options. Options are like multiple options bets. Now what are multiple option bets? Like a casino. You go in a casino, there are multiple numbers on which you can put your money. Horse race, multiple number of horses wherein you can put your money. So these are options wherein you can put your money. Lottery exactly does not simulate the option trading, but the concept lottery is like option. That is, you buy a very small penny option for an expectation of huge. This is a concept which simulates the option. There is a risk of losing entire capital and bankruptcy, as I told in options. Options simulates matka. Now, matka, many people might not be knowing that Bombay Bazaar, Kalyan Bazaar are types of matka. Options in some ways simulate the matka. Now, how it simulate? Let's see. See, this is an example. In matka, you have 10 numbers, 1 to 0, on which you can bet. You put 1 rupee on a particular number and you are going to get 9 rupees back. 9 rupees back on 1 rupee. Now, what is the probability of winning over here? 1 is to 10, because there are 10 numbers. Now, here we will see on 1 rupee, on number 1, 55 people have bet. On number 2, 75 people have bet. On number 3, 100, and so on. Like strike prices and options, Matka has various betting options. Here you can see on number 6, most of the people have betted on number 6, whereas least people have betted on number 18. So the person who runs the matka, the entrepreneur of the matka, will have more losses when 150 number comes, because he will have to give a payout of huge amount, whereas he will have more profit when 7 number comes. His payout will be very less because only 18 people have betted on it. Similarly, in options, you can see, just replace this people by open interest. You will see the highest open interest call writer will never allow the price to cross it. If it does so, he will remove his position and write upside. So that strike price where highest open interest is there usually is not crossed, and the option expires below that. Similarly, for a put, that strike price where highest open interest is there usually is not crossed downside, and the option expires above it. This is a concept in which the matka simulates an option chain. Now, speaking about it, equity, I say, is like doing a business. Derivatives is definitely a gambling. Gambling because of leverage, gambling because it is a contractual form of trading, gambling because you have the time limit. All remember, all bets always have a time limit. So most of the things in derivative simulate a gamble. That is the reason you will see many people going bankrupt in derivatives, not in equity. In equity also, those Z group players usually are bankrupt. So thank you friends for listening. Next video, we will be talking on frustrations of an intraday trader in the stock market. If you like the video, please press the like button.